All right, folks. Welcome to Chapter 3. More trading, less drawing. 3 topics, which is what to do, what to look for when going hunting for setups, stages of development of a professional trader, and how to use trading to generate actual income whenever you want to. I would never push any of you to push live funds in an account, right? I'm not a financial advisor. This is not financial advice. But whenever you decide that it's the best thing to do to trade a live account, then this is how I use trading to generate an income. Now, before starting, if I see any of you who have a chart like this, full of garbage, then I'm going to instantly block you. Your chart should have nothing more than an entry, stop loss, and target. This is how you execute on a trade, all right? And this is what you anticipate. These are the feelings you go through before each trade, which is an important topic. If you are a theorist and not a trader, then this is an extremely uncomfortable zone to be in right now, right? When you trade live, when you go back in history, and history is a gold mine for those with eyes to see, and it does repeat itself. When you go back and back test, then you're really confident. You're like, yeah, look, it works. Yeah, 10,000 risk reward. But then when it comes to live trading and anticipating the candle, then you get really uncomfortable. If that sounds familiar, then it's normal. We all started that way, right? And the solution is this. Anticipate more and trade more. How to anticipate? At the start of a candle, right? Because as we know, you want to choose one candle you trade. That's the whole summary. Before it opens, you will mark the candle you're trading's opening time, not price, key level, and a pre-opening time liquidity pool. You will avoid trading the first third or the first quarter of the candle and wait for a manipulation to occur. Once they push price into an old low when bullish or an old high when bearish, wait for your entry model and execute fearlessly. Seek looking for the pattern, and I say pattern lightly, right? It's a logic. Seek looking for the pattern open, turtle soup, / key level expansion, right? Which is a more precise way to look at accumulation, manipulation, distribution. Now let's visualize this because some of you right now, your brains are cooking. You're like, what are you talking about? Let's visualize this. When I go hunting for a setup, then I'm looking for open, key level expansion. That's it. Open, key level expansion. Open, turtle soup expansion. Open, SMT expansion. All the same thing, right? Basically an open goes down and then up when bullish. Open goes up and then down when bearish, using the if-then principle. So your trades are going to look like this. And this is an extremely detailed, nuanced look, which you will rarely, if ever, find someone talk about, right? You mark the opening time. You mark liquidity pools up and down. You mark a key level when bearish. Then you'll see this happen if you're right. Right? It'll go up. Let's imagine this is a Tuesday or 9 o'clock a.m. Right? 9 o'clock. It goes and rallies up. It creates model number 1. And it dumps. Market structure shift. Remember? A true, real market structure shift. And we'll go in depth on that later. Real in depth. Right, so basically you go and you anticipate the key level which you expect will repel price and trade it. But Doc, what do I target? You target 50% first, and then the opposing end of the range. Range high, range low. Typical standard range theory. Beginners, trade the weekly candle. If you're a beginner watching this, whether it's right now or it's 10 years down the line, beginners only trade the weekly candle and analyze the daily and 4-hour CRTs. Intermediate, trade the daily candle and analyze the 4-hour CRT. And a mistake some of you make is thinking you're advanced. You're not advanced. Don't cheat yourself of learning properly by labeling yourself as an advanced student if you're not. Right? That's you simply cheating yourself of improvement. Don't do that. Be fair to yourself. If you really want to improve, and that's what I advocate for, which is seeking improvement at all times. If you really want to improve, then the first step is realizing how good or how bad you actually are. All right? Intermediate, trade the daily candle and analyze 4 hours CRT. Advanced, which is very few of you, trade the 4-hour candles and daily, or weekly if you like. At this stage, at this level, it's your choice. And practice with 1-hour CRTs and below. Practice analysis. Stages of development as a professional trader in the future, if you choose to. You first yearn, then you learn, and then you earn. Right now, you are in the learning stage. By watching this video, you have entered the learning stage. And the learning stage is the longest, most drawn out, most boring, lonely. It can get really dark. You feel like no one's with you. You feel like no one's by your side. You feel like you have no one's support. You feel like, should I quit? Should I continue? What do I do? But once you leave this stage of learning and all the losses that occur within it, and all the sleepless nights, all the every centimeter of baggy eyes you get from this stage, it's all compensated once you advance from learning to earning. It's always worth it at the end. Whatever you lose, you make back. All the unclarity gets clarified. It all clicks. You get that aha, that light bulb moment, and it clicks, and you then realize that you've now earned something. You've left this stage of learning after losing tens of thousands, perhaps even hundreds of thousands of dollars in some cases, perhaps even more. Millions of dollars some people have lost, which I know personally. I know a friend of mine personally who lost a couple $1 million in trading. And he's still learning with me today. But the advancement from learning to earning is the sweetest feeling in the world. You can never experience something. I can't even begin to describe it because it's something you need to experience yourself. And I hope and I wish the best to all of you. And I wish all of you experience the sweetness of transitioning from being a learner, a losing trader, to being a profitable trader. You then realize that you have a skill for life, which nobody can ever take from you, ever. It's yours now. Once you learn it, it's yours. It's a skill you've acquired for life. It's like learning medicine. I'm a doctor, right? It's like being a doctor, off the charts. It's like being an engineer. It's like a trade. But first, you must submit, you must suffer, you must lose, you must be confused, and then it'll click. For some faster, for some slower, for some never. Analysis is not execution. They're two different things. And I don't want to leave you on the bad note, but I promise you it gets better. How to use trading, excuse me, how to use trading, and my throat is killing me. How to use trading to generate income. By understanding the three most important parts of execution, which is journaling, risk management, and risk to reward. Right? Journaling. Every single profession has some sort of a journal. A doctor, me as a doctor, for example, I have the informed consent, I have the medical history of my patients. I'm required and obliged by law to fulfill that journal. Same with an engineer, an architect, a lawyer, even a cashier prints a receipt, right? So every professional in all fields of life, every profession has some sort of journal. Professional trading is no different. You need to have a journal in which you journal your missed trades, your winning trades, and your losing trades. Your journal it serves as support for you when you're down. Right, when you're down and you feel like it's not for you, you go on a tilt streak, you go on a losing streak, which all of us will go through, by the way. Every single trader, no matter how accurate he is going to go through an 8 trading loss streak. Excuse me, losing streak. Right? So all of you and me and ICT and Gan and Wyckoff and everyone's going to go through an 8 trade losing streak. It's coming. It's coming for me. It's coming for you. It's coming for everyone. And when it happens, it's an extremely depressing time for your life. You feel like it's over. You feel like, is trading for me? Should I even continue anymore? But the journal helps you because you'll look into the journal, you'll see the trades you took, you'll see those monstrous, extremely accurate, precise trades. You'll see the money you made in the trades. You'll flip through the pages of the journal and see how good you were, and it'll help you power through the devastation of the loss. Which, by the way, if you have good risk management, then no loss will affect you. Enough to depress you, at least. Right? So the next leg of the 3-legged chair of professional trading, when you choose to, is risk management. Risk management refers to the amount of money you lose per trade, percentage-wise. You should never risk more than 1%. Ever. The photo says 2%, doctor. You should never risk more than 1% ever. Anything more than 1% is gambling. Right? So, yeah, but how do I flip my account, doc? Believe me, if you get basic, like 1 to 3 RR setups, and that's 3% gain per trade, 5 trades a week, for example, as a day trader, or even three trades a week, that's like 9% a week, 40% a month. If you think that's bad, then you need to go and recalibrate your expectations of the market, because this is not a casino. This is a professional trading environment. Right? This is a profession, not a hobby. right? So, and if you get 50% per month, which I'm in no way advocating for, you've seen me take accounts a lot more than that. But that's at my level. The stuff you can do with money is mind blowing. You've seen me take $1,000 to $25,000 in a week, for example. You've seen me take $25,000 to $100,000 in a week, for example. The old students have seen even more incredible feats of trading and compounding money. But that's at my level. Even 50% a month, which, by the way, is an extremely impressive number. 50% a month blows every single fund manager out of the water, right? Most fund managers, they promise you a return of like 10, 12% on average, right? If that. So understand the game, understand the parameters. Flipping an account from $20 to $100 or $1,000 is not the purpose. The purpose is to generate a stable income every month, as stable as possible, using trading, and slowly and progressively increasing, increasing the percentage gain month by month, year by year. Right, that is what professional trading is. RR. Now, the beginner trader thinks that you need a 90% win rate and a 1 to 10 RR, as is always demonstrated on social media. And that is completely false. That is nothing short of bullshit. In fact, with a simple 25% win rate, with a 1 to 3 payout, which means you risk $1 to gain $3, right? If you risk $1 to gain $3, which is framing a 1 to 3 RR setup, which is fairly simple, using what I've taught, you can be wrong 75% of the time and make money. Now think about that. You'll trade 10 trades. Out of every 10 trades, 7.5 trades will be wrong, you'll fuck up, and you'll make money. If that's true, then ask yourself what you've been doing with your whole trading career so far. Gambling away tens of thousands of dollars, tens if not even hundreds of thousands of dollars. You gambled away with no system. If you had to pay, or if you just learned without even paying, a correct system of managing your money, then you would have saved hundreds of thousands of dollars, tens of thousands of dollars. Simply knowing this fact, which is the power of risk to reward and pairing it with a strike rate, no matter how low. And believe me, if you have a 25% strike rate, then you need some help, right? It's rare to find someone who's studying under me who has a win rate below 50%, right? But the reason I bring this up is for you to tickle your brain a bit, right? To give some food for thought. If you can make money and be profitable with a 25% win rate, which is a 75% loss rate, right? A 25% win rate is a 75% loss rate. If you can make money doing that, with a simple 1 to 3, imagine what you can do with a 50% win rate with the same 1 to 3 or a 60% win rate. Imagine increasing the risk to reward 1 to 5, 1 to 6, which is also very simple. Imagine suddenly making money doesn't seem that far off, does it? But all you have to do is fix your brain, fix the way you think. You don't go in and max leverage full port. Just gamble your accounts away. Account after account after account. Until when? Until when do you plan on blowing away accounts? Until when do you plan on, in exchange for a dopamine rush, literally burning your hard-earned money? Just burning it away. Not even a casino, stuck at home in front of your screen. Right? So, get a grip and pay attention. This is the only purpose any of us has got into trading, is to make money. Correct? Correct. This is how it's done. Understanding these three things: journaling, risk management, and risk to reward ratio. These are not the same thing. This is summarized in, and let's summarize this whole lesson. Journaling is summarized in miss, journal, catch next time; win, journal, repeat; lose, journal, avoid. And you better be writing down intensive notes. Risk management is summarized in risking 1%, no more per trade. 1%. Risk reward is defined by you can make money having a 25% win rate, which is also, by the way, a reason to, if you see someone mocking someone for being wrong on their live calls, like seriously, sometimes in satire, because I pride myself in accuracy. You may see me doing it. But if you see someone genuinely criticizing someone and belittling them as a trader for being less accurate, then they are not a profitable trader. A profitable trader never makes fun of someone for not being wrong, because they understand this table right here in front of you. They understand that you can make money while being wrong 75% of the time, and that's all that matters. It doesn't matter how flashy you look when you call the top or the bottom. It doesn't matter how flashy, how many followers you have. It doesn't matter. It doesn't matter how many subs you have in your Telegram group. None of that matters. All that matters is, did you make money? When it's all said and done, did you add money to your bank account?